Hello everyone and welcome to this week's trading update. It's Wednesday, February 19th, 2025, and despite a shortened week due to President's Day in the US and Family Day in Canada, plus the ongoing geopolitical events and trade war concerns continue to influence the market. For more in-depth analysis, please consider registering for our live webinars where we cover the news event release in real time. The webinars are also available live on YouTube. The schedule and the registration links can be found within the video description. Before we proceed, we must understand the risks involved in trading. Please take a moment to review and read carefully the disclaimers displayed on the screen. Please remember that trading involves risk. Past performance is not indicative of future results and losses may exceed deposits. Now let's dive in. This week we are watching several key events: the latest FOMC meeting minutes, inflation data and retail sales from Canada, a purchasing manager index from the Eurozone, and Reserve Bank of Australia and Reserve Bank of New Zealand interest rate decisions. Tariffs remain a concern for traders. Although the US President has postponed implementation till March 1st, the potential impact on FX trade kept traders on edge. The announced 25% US import tariffs on steel and aluminium and the potential retaliatory tariffs added to this uncertainty. We are also watching to see if these tariffs will fuel inflation or not. There's an ongoing debate on how tariffs will impact inflation as it begins its implementation. All eyes are on the minutes from the January 29th FOMC meeting scheduled to be released today. Traders want to know if policymakers are still worried about high inflation resulting from any changes to tariffs or any implementation of tariffs. And according to the Bloomberg analyst surveys, 98.1% of participants expect rates to remain unchanged for the March 19th, 2025 FOMC meeting. Canada's inflation rates released earlier this week were higher than forecast, as well as a revision for the previous month reading, again that took higher than previous one. This led traders to reduce bets on interest rate cut by the Bank of Canada for the March 12th meeting. We also have Canadian retail sales scheduled later in the week. The core retail sales month over month is forecasted at 1.7% compared to negative 0.7% last month, and the retail sales month over month are forecasted at 1.5% compared to 0 for the previous months, and this is according to the Bloomberg analyst surveys. Earlier in the week, we had the RBA, Reserve Bank of Australia, cut interest rates by 25 basis points, which was widely expected, and we also had the Reserve Bank of New Zealand cut interest rates by 50 basis points, which was also widely expected. Comparing the monetary policy to the Bank of Canada, we can see that Bank of Canada, the interest rate cuts are actually, expectations are becoming less. This may create a monetary policy divergence between Bank of Canada on one side and then we have the RBNZ and RBA on the other side, which may create opportunities for price or changes in FX exchange rates for currency pairs such as AUD CAD or New Zealand CAD. The chart we are looking at compares inflation levels between Canada, Australia and New Zealand. We can see that the three economies have been declining and then now we are seeing a slight uptick to the upside. And according to the CME FedWatch tool, we can see that 97.5% of market participants expect rates to remain unchanged for the next upcoming FOMC meeting on March 19th, 2025. Now let's look at technical analysis for some key currency pairs, the Euro US dollar. The overall context of the chart shows that price action has been trading within a sideway within this horizontal channel, the two green lines, for an extended period of time, maybe go back to 2023 or 2022. This line here acted as a resistance previously. Price action broke out and now it's finding support at this level one more time. The more recent price action, we can see it was trading in a descending channel. It broke out above the channel, broke and closed above, and then we had multiple throwbacks where every time price action found support above the extension of the upper border of this descending channel. We have a confluence of support represented by the weekly pivot point, the green line here, horizontal channel support, as well as three moving averages. All of them are within the same price range. RSI is neutral near its level 50 and intersecting with its moving average. Moving on to USD JPY, the overall context of the chart can be seen on previous videos, so we'll just go over the most recent changes. We had a price range. Price action was moving within a range, following finding a resistance along this dashed black line here, and then we had a descending or a declining trend. At the moment, price action is attempting to, or we have a double bottom formation under construction. Whether it's going to work out or not, we have a confluence of resistance above price action represented by a monthly support and a weekly pivot point, as well as three moving averages here. The baseline for the double bottom intersects with another resistance level R1. In some cases, pattern may not work and it could be an indication of a move in the opposite direction. For USD CAD, or the US dollar against the Canadian dollar, we have price action has been, the recent price action moving in an ascending channel or an uptrend. Price action broke below the uptrend following the delay in tariff implementation and has been trading below its moving averages since the break. At the moment, price is attempting a correction here, finding resistance along a weekly pivot point, a moving average, and a second level of resistance here at a monthly support and a previously broken support that's now become a resistance on the weekly calculations. Looking at the OANDA's position ratio, we can see Euro USD, 60% of OANDA's clients are long Euro dollar, while almost 40% are short. We can also see currency pairs such as New Zealand USD, 83% long compared to 16 or 17% short. And when we look at the OANDA's order book indicator, we can see a cluster of sell orders above market price here on the left and a cluster of buy orders below market price here on the right. Thank you for taking the time to watch this video and looking forward to next week's update.